Welcome back, students. This is your economics teacher. As you know that last week we completed our first method of measurement of national income, which was the value added or the product method. Today what we are going to start up with is the income method. What are the steps involved in it and what are the precautions to be taken before we proceed with this very particular method. As you might be remembering from the last lectures, we used to say that production generates income, and in that very cycle we had three components: the production, then an expenditure takes place, it generates an income, an expenditure takes place, and back production takes place. So from that very cycle, from this very saying production generates income, this is the second step. Now we are going to calculate national income, that is NNP at FC, by the method of income point of view or income method. So how we proceed with it is that first of all we will look into what this method is actually all about. So while understanding the method, we will first define the method in the way we used to define each and everything. So when we say income method measures, I'll write it down, income method measures national income, that is NNPFC, from the side of payments made to the primary factors of production in the form of, there are four forms we always use: rent, wages, interest, and profit. That also you know that what we pay these all to, I'll come on that, profit, for their product to services. In an accounting year. So dear students, here we are with the definition. Before we understand what this definition is all about, we have been using this accounting year word time and again. In economics we call it financial year as well. It is the planning done for a particular period of time. It's a period of time usually we say. When we say accounting year, it's a period of time, and in this period of time in Indian context covers 1st of April to the 31st of March next year. That means this time we are in 2020, year 2020. So this is 1st of April of 2020 and it will end on 31st of March 2021. So this is what we mean by financial year or accounting year. Coming back to the definition, in the income method you see that national income is measured from the sides of payments made. So these payments are made to the factors of production, as you know. So we have factors of production: land, labor, capital, and entrepreneur. These factors of production are remunerated, are paid with the factor payments, and the factor payments are respectively: for land we pay rent, for labor we pay wages, salaries, compensation of employees, it is also called as; for capital we pay interest, and for to an entrepreneur a profit is earned by an entrepreneur or a profit is paid to him. So these are the payment, this is the payment side. We consider this payment side here in income method of calculating national income. When we say that we calculate all these very things, thus national income is calculated by adding up these all factor payments. That means rent plus wages plus interest plus profit. These all are added up. When you add up all these factor payments, when you add up all these very factor payments, the resulting total of these domestic incomes are NDP at FC. It is the result of this is domestic income or the NDP at FC. We call it NDP, and net domestic product at factor cost. So this net domestic product at factor cost is then summed up. That means this net domestic product at factor cost, which is the summation of all these very factor payments, is then summed up with, or is then added up with, the NFIA, that is net factor income from abroad. When we add it up with net factor income from abroad, what we reach to, you can now yourself calculate it, and ultimate aim of ours is to reach at NNP at factor cost, that is national income. So the resulting total which we got was NDP at factor cost. By adding this net domestic product at factor cost, we get net national product at factor cost, that is national income. So dear students, if we are done with what the method is all about, let us look into the steps. What are the basic steps which are involved in it, and then we can come up on it again and we may sum it again. So the second thing is steps involved. Steps involved. What are the steps involved? As we have done in the previous method, that is product method, so we will do it here also, because it is according to your syllabus. We have to look into the steps, then only we'll be able to reach somewhere. First and foremost is, as it was there, to identify the enterprise. Identify enterprises. Identifying enterprises means which employ these factors of production, or I'll write it like identify enterprises which employ factors of production. Which employ factors of production. What are the factors of production? Again, land, labor, capital, and entrepreneur. So these are the factors of production. We will have to look first which part of, or which enterprise is employing this factor of production. Then second step will be to classify factors of production. Now you can say we are already done with the understanding of that this factor of production belongs to this very particular enterprise. So we can here directly talk of, we can classify here, or we can say directly that to classify the factor payments, that will be better for us, to classify the factor payments into various categories. And now you know what are the factors of production, what are the factor payments. So you can now categorize these factor payments into what exactly? That rent, wages, interest, and profit. After you are done with this, or you are able to now classify factor payments into these all very things, you must bear it in mind that we do not only look into these four things only. One more concept evolves, and that is mixed income. There is also one more concept in the economy that is called mixed income, that is to be classified also. See, these rent, wages, interest, and profit are directly related to the factors of production we are talking about, but there are people who are not working in organized sectors and they do earn some income. Their income is to be evaluated, is to be calculated. Or you can say this mixed income can be taken as classify factor payments into, this is important now for you people, please bear it in mind, compensation of employees. Mixed income and operating surplus. That means we have now some more terms to take into consideration or to understand that what is this compensation of employees, or what is this mixed income, and what is this operating surplus. I'll come upon it very shortly, but first we will complete what are the next steps. And third step is to estimate amount of factor payments made by each enterprise. Now we will have to look into each and every enterprise's factor payments made, what the factor payments they have made. We will have to we will have to calculate that, we will have to estimate that what are the factor payments and which enterprise has made this particular factor payment. That means we are categorizing each and every sector of economy from very base to the end, or from very bottom to the top, into primary, secondary and tertiary sectors, and so on and so forth. So fourth step for us here will be to sum up all these very factor payments. Sum up all factor payments. If you look into the steps, this is nothing but the elaboration of the definition in itself. So you have to be a bit clever here to understand each and everything in connection. So you will have to connect A with B, with C, with D, and it will be easy for you to answer each and every question or any question you are being asked with. So sum up all factor payments made within domestic territory to get domestic income. So what is domestic income? Technically called as NDP at FC. So when we reach to NDP at FC, what is now left? Just to estimate net factor income from abroad. So we will calculate now net factor income NFIA from abroad, which is added. I am writing each and every word for you people so that you may make your notes and all also. To domestic income. Domestic income. What is domestic income? NDP at FC. What will we derive? We do it all to derive national income. National income. So symbolically, if we will have to say symbolically, we will have to show it symbolically. That means NDP at FC plus NFIA, net factor income from abroad, is equal to NNP at FC, factor cost. This is your domestic income and this is your national income. So by adding up NDP FC to NFIA, we come to the conclusion of NNP FC. So this is domestic and this is national income. So these incomes, basically we have a final aim of reaching to the national income that we reach to. But dear students, as we did it last time,